Rajnish Kumar, CEO at Fullerton Securities and Wealth Advisors, now joins in from New Delhi. Rajnish, what's your sense of the markets? Are you approaching it with the premise that we are going to be stuck in a tight range or head lower from these levels?
Well, I honestly believe that at least for some time we are probably going to be range bound, but the bias will probably be negative. So I don't see a sudden collapse of the market and some very rapid downward movement suddenly very quickly. But we are range bound with a negative bias.
So Rajnish, I think for May we're going to end, provided we see these these losses in the markets today hold and we don't see any further recovery in the remainder of the day. I think we should end May at a loss for the Nifty of about 7%. Would you argue that we've bottomed out, that we can't go any lower from here, that it's only up from here on?
No, not really, because as I said, I see a negative bias in the market. So, in fact, I wouldn't be surprised at market trending downwards from here. May not be a very rapid downward movement, but I would think it should move downward from here.
So how much to your mind will it go down by?
Yeah, that's difficult to predict, but my sense is that probably we are looking at maybe a few percentage points lower from these levels over the next few days as these GDP numbers get digested. Also because I suspect that when the inflation numbers come in afresh, they are not going to look good, and that's sort of going to give a further downward push to the market. So I expect from here on till probably another few weeks in the short run for the market to range downwards actually.
Sure, but Rajnish, in a market like this, it would really take a brave man to really stick his neck out and buy into the market such as this. So would you advise buying into perhaps beaten down names like infrastructure or capital goods?
Well, infrastructure and capital goods is something which I would not advise, simply because we have not seen too much initiative in terms of policy reforms to support this segment. But there are other opportunities which will emerge, and I think it is in times like these when if you don't panic and if you sort of stay true to the valuations, when you can spot good opportunities and invest, and I think that holds true. So, of course, looking beyond infrastructure and capital goods, which are very clearly linked to reforms, I would think that it's a good opportunity to look at good buys as the market dips.
Right. Rajnish, one way of looking at it is that the rupee has already taken a fairly serious battering. It's almost lost 15% since the start of the year. And the downside risk to the rupee isn't very much. I don't think anyone believes that it's going to break 60. Also, the fact that crude oil prices have corrected quite a bit, possibly may drop to even below $100 a barrel. Would you argue, in light of all of this and the fact that the India consumption story continues to hold strong, that now may be a great time for foreign investors to start looking at India?
Yes, fundamentally I would agree with what you're saying, but I think it has to be triggered by something, because market is eventually driven by sentiments. And we are not seeing any positive sentiment emerge out of any quarters as far as India is concerned for a while now. So I think if the government takes some steps and it does a few things which reassures people and sort of brings faith, so to say, back into the India story, which seems to be on the wane right now, what you are saying should happen. And I agree with you that rupee should not go down significantly beyond these levels, but it requires a trigger.
Sure. So would you say that, I don't think anyone expects anything from the government. You and I at least shouldn't expect anything from there. But on the global front, given the fact that the situation isn't going to look better anytime in the near future, do you believe those triggers really will be in the form of QEs or LTROs?
Yes, absolutely. I think it's not very realistic to expect domestic triggers at this point in time. So if something happens in terms of better liquidity globally, then that is what probably will allow the currency to gain back its strength. But yes, the flip side is that if things get worse, we could actually see currency weakening further, in spite of a lot of fundamentals being stacked in our favor.
Rajnish, just one final word on what you make of the earnings season that we've seen so far, because despite all of the gloom and doom that we've seen in Europe, the slowing economy, back here, we have seen fairly strong revenue growth. Most of the brokerages also believe that the big companies have beaten street estimates. Is this a view that you would share?
To some extent, yes. But, one also has to look forward. And what it does seem to us is that the growth going forward may slow down. The top line growth for companies may slow down. We have already seen profit growth slowing down significantly, and now in the coming quarters we run the risk of seeing the top line growth slowing down as well. So what is true for this quarter may not hold for the subsequent quarter. So we are watchful on that account.